ambiance.
Good morning from Cape Cod, Massachusetts, home of the Pilgrims. You're watching the Short File Show live. I just want to come on and talk about the latest news in volatility and other market stuff. GME, or GameStop, back down below 130 actually at the moment, to nobody's surprise, who watches this program at least. Things come back to earth. Stuff comes back to reality. Now, some people have kind of framed this whole GameStop thing as like, the public versus big Wall Street or something like that. And that's not really what it's about in the end. In the end, it's about something that's value went way higher than what it's actually what most people would consider it to be worth, which is the stock went way higher. This is a company that rents used video games, and as much as that might be a decent business, stuff is going online mostly. I use Steam to get video games, and a brick and mortar store that rents used video games doesn't have a huge future, and certainly doesn't justify multiples in price that this stock has gone to. So anyways, onto the VIX. The VIX back down, was down over 3 points, now down 2.73. And a lot of times the VIX is referred to as the fear gauge by many people. And this has certainly been the case with the recent spike. Much has been made about the fact that this is one of the biggest spikes of all time that occurred last week in the VIX, seemingly out of nowhere, and really not justified by any particular move in the stock market. As I get out of the way here so you can see the screen, not really justified by any move in the stock market, or for one of the biggest top 5 VIX moves in history. There's not like one of the top 5 events globally to justify it. We've certainly had more fireworks this year on other days than this particular one. And you can chalk it up, I believe, just to general anxiety in the marketplace. People on Wall Street don't understand why we rallied so much with GME and AMC, and all of a sudden it's like their world is falling apart. What's going on? Why is this stuff rallying? It doesn't make any sense. And it seemed like there's this fear over, just the market not making sense anymore, or it's just shaking the foundations of some of these people trading stuff. Like, all these people who follow their charts and talk about this valuation and gobbledygook, which is pretty much a bunch of nonsense as far as I'm concerned, anyways. But all these people, it sort of shook things to the foundations that. GME rallying like crazy in AMC, and it just started to seem like other ones were going to start rallying. Now, of course, the VIX is derived from the S&P, the SPX, and so if we take a look at the E-mini here action, we can see that yes, indeed, we did have a down move in the E-minis, which sort of coincided with this VIX spike, but however, it wasn't a down move that was like way more than any other time we've seen before, or really enough of a down move to have justified like one of the top VIX moves in history. And I'm going to demonstrate that to you right now by showing you a chart. So here is a chart. This is a 1-year chart. Let's go to a 3-year chart of the E-minis. This representing the S&P 500, the SPX, and look, it's just a little dip. We had a little dip down, right? But not anything to justify like one of the biggest spikes in history. So what was this all about, and what does this teach us about trading here? Well, to me, what it teaches us is when you've got a VIX spike that's not really based on like solid fundamentals or a change, a complete change in the environment of the stock market, then it's a fade, right? And we're seeing the VIX down a lot today, and it seems perfectly conceivable that we can go right back to a 20 VIX right now here, because this spike wasn't really based on much of anything other than anxiety. And a lot of times that's what drives option buying in the SPX. Remember, the VIX is based on option buying in the SPX, and there was anxiety market wide over GME and AMC. And certainly, as is always the case with the market, as time goes by, as we look back on something, there's more and more clarity. And in fact, many times with market events, the only time we actually get clarity is when we look back on something. And this will likely be the case here. But, when we look, if you look at the chart here of the VIX, this will just be seen as another bump on the way down from as we come off this spike that started back at the beginning of the COVID crisis. And so we've seen VIX withdrawal here, and it certainly was a sale in the middle of this spike. And the lesson to learn is, like, can you kind of in the moment try to figure out whether this is sort of a justified change in volatility that's going to last, or is it just a spike that's going to recede very quickly? And in this case, there wasn't really a perpetuating event that justified such a big move in the VIX. It was just fear-based, and it seems to have done with this whole Wall Street bets, GME, AMC type situation. And certainly Wall Street Bets was involved with this and did have some, and certainly what happened was that there was a lot of trades by Wall Street on one side of the trade. You had a bunch of people on one side of this trade, which was to the short side, and it took a little bit for the trade to unwind. It blew up in a bunch of people's face, and it took a little bit for the trade to unwind. Now, we never know exactly what positions people have, once again, until sometime after the date. And certainly media was reporting that hedge funds are on one side of the trade and retail's on the other. But the reality, I'm sure we'll find out, is that some hedge funds were long, some were short, some institutions were long, some were short, and retail was both long and short. I guarantee retail lost money. There were people buying this. I was looking in the chat room for GME when we were 300, and there were people saying, I've been long it. I wasn't selling it at 500. I'm waiting. This one guy I saw, his thing was, this is either going to 40,000 or zero. I'm certainly not selling it at 300. And I think we will, there will come a point very soon where we don't see 200 again ever in this stock, and that will be the end of it. Which, if you step away from the situation, you back up from the situation, and you think of it from farther up above it, that makes a whole lot of sense. I mean, here's the stock going back 5 years, right? They haven't like cured cancer. They haven't. There hasn't been some sort of gap in productivity or increase in productivity or some sort of original idea that they've had that's going to differentiate them from other competitors in their industry. So it stands to reason, if you step back from the stuff and the way to step back from stuff a lot of times, if you're looking at charts, is to back the chart up, back your charts up. When you're in the heat of something and nothing seems to make sense for you, you're looking at a daily chart or a 5-day chart. Back yourself out of the charts to get perspective. It's almost like like many young people. When I was in college, I experimented with LSD, and that experience, it allows you to view your life from a perch above and outside of your body. It's the same kind of process you need to go through as a trader when you're in the moment of these things, is to kind of back up and try to view things from farther away to gain perspective. And it seems that that doing that would have given you the insight that GME is certainly a sale at 500, certainly a sale at 300, certainly a sale at 200, probably a sale at 100. And the same with AMC. It's not as extreme, AMC going to 13, but look where AMC came from. Now, AMC could have a rebirth. I mean, AMC came from 20. Let's look at the chart of AMC for a second, because it's a little bit different situation. AMC, on, I believe, the shoulders of The Walking Dead and Breaking Bad and some other great shows, was higher up here. But if you look at their earnings, since they've been losing money, and the stock's gone way down. Now, certainly something could happen. They could have some great hit shows and stuff that kind of turn things around for them. But this particular event and this craziness of people buying this up is not a fundamental change for the company. It's just market activity, right? And which is the the complaint that old school Wall Street had with all this trading activity, that it wasn't based in the fundamentals or something like that. Now, let me be clear. I entirely support the retail traders on this whole thing, and if you're willing to put your money at risk in the market, then what you buy or sell, it's not for other people to judge. Certainly the talking heads on CNBC, that Scott Wapner guy, that guy's not a trader. He's a market commentator. And people who are market commentators that don't have their money at risk, who stand there and try to tell people that they're making the wrong trade because they didn't sit there and look at a chart before for long enough before they bought something, is just, it just shows a lack of some sort of like disconnect between these market commentator guys and actual trading. And I certainly support retail traders, and it does upset me that that Robinhood shut these people down. However, the point with that, once again, is the big banks and the people who ultimately bear the risk when you put a trade on can tighten up things any way that they see fit to limit their risk. And we're all at the mercy of our clearing firm in the end, as traders, because clearing firms are the ultimate guarantors of an options trade. So when you're talking about options trading, it certainly shouldn't be a surprise to anyone when a clearing firm says we're going to limit your risk. Now, as far as stock trading, if you're just a straight up buyer, if your whole thing for trading is you buy shares, you have the money in your account to buy shares, and all you do is buy shares and then sell them out when a stock is higher. You're not shorting, you're not using options or anything like that. Then I can see being justifiably very upset that a clearing firm is not going to allow you to buy a stock all of a sudden out of nowhere, and that's completely ridiculous. But as far as like options trading and having to put up more margin to have like unlimited risk, like selling naked options, or having the amount of margin you can use be limited, I certainly get that. And so it's kind of down to the specific thing, whether it makes sense what these firms have done in the last couple of weeks due to GME and the whole Wall Street bets thing. But clearing firms certainly have a right to limit your risk where they see fit, because they ultimately are going to get left holding the bag if your account blows out. So that's always been the case. There's always going to be somebody, in professional traders are more comfortable with this than I think retail traders, that there's always going to be somebody up above you looking over your shoulder who, to some extent, you're going to have to convince that to back you up when you're making whatever trade you make. everybody has to serve somebody in a way, and so it's not as much of a surprise, I think, to professional traders as it may be to some retail people when you get reined in on a trade. All right, so that's my comments on this stuff right now. This VIX spike seemed fear-based, and I wouldn't be surprised if we just crumble back down to 20 or even below. This particular spike might be the impetus we need to get finally through that 20 level. Look at this chart here, and you can see we've been stuck at getting through this 20 level, but maybe this up move as the rubber band contracts back down will actually blast us through 20 in the VIX after this. It's really going to depend on if we make new highs in the market, and we're well on the way to making new highs. So we shall see. Certainly a down move and then a quick bounce back should return confidence to the markets. Right now, VIX down 272 as we come into the trading session. We'll see if it holds up today. We're back above, I believe, 3% contango as we check VIX Central really quickly before I let you go here. I have been checking out Brent's live streams. I don't know if you guys have checked that out, but good stuff from Brent with the live streams, and hopefully he'll keep them coming. Thanks everybody for watching, and I'll see you very soon. I wouldn't be buying a bunch of GME if I were you on the dip here, because the dip can easily continue go back down. I wouldn't be surprised if we popped to 300 again, but ultimately we are going lower here. It seems quite inevitable to me, and I'm not telling you how to trade, certainly, but for me, I would certainly not be on the buy side of this particular issue. All right, anyways, thank you for watching. Thank you for your support. Please, for all those who support me on Brent link, let me see if I can get that for you. For those of you who support me on Patreon, thank you for your support. Please consider getting a membership of like $2 or whatever for YouTube if you don't already, because that really helps me out over the long term. It's, $2 for a person isn't a lot, but it kind of adds up amongst a bunch of people. I'm coming up with this the Brent link for you here real quick. Here we go.
So it's just one of those days where you wake up and
let's get this, and I'll put that in the chat for you. And please also, I run one of the biggest VIX group on Facebook. If you're not hanging out there, you should be. It's free. And I know some people don't like Facebook, and that's certainly your right, but we have over 2,500 people in the volatility trading group on Facebook, and it is the largest VIX group on Facebook, I believe, at this point. And you can go there with your questions at any time of night or day, and somebody will jump in and answer you. And there's people from the biggest firms there. There's people who started, the creators of VXX are in the group. There's all kinds of resources there for free that we provide you with to help you with your volatility trading. Thanks everybody for all your continued support and watching, and I will see you next time on the Short Vol Show Live.
You're watching Famous Dave.